Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, April 1st, 2009. Japan's Tenkan Index of Sentiment among large manufacturers slid more than expected to minus 58 for the first quarter, the lowest figure since the survey began in 1974. Since Japan is dependent on export growth to help fuel its economy, the current pullback in global trade will pressure growth throughout 2009. With exporters seeing sales decline, companies will continue to fire workers, which may shrink consumer spending. Movement in yen pairs were subdued today. The Aussie yen, for instance, fell initially following the Tenkan survey, but started recovering in European trading. By the New York session, the pair had settled slightly lower than yesterday's high, with volatility decreasing compared to the last three sessions. News from Europe was also weak. German retail sales undershot forecasts of a small increase to show a third straight month of declines. Sales were down 0.2%, though there was one less shopping day in the month compared to February of last year. The data showed that Germans spent more money on cars as the government instituted a car scrapping scheme, though that has taken away from other parts of the retail sector. Unemployment in the Eurozone jumped to 8.5% in February, higher than expectations, and underscores the effect of the recession on jobs. The new rate is the highest in 3 years. Firms in the region have been shedding staff as they reduce output by record levels in order to cope with the current recession. The UK manufacturing sector, though still contracting, significantly slowed the pace of that contraction in March. The PMI index rose to 39.1 from 34.7, much higher than expectations. In February, the index was at an all-time low. And this rebound can give the central bank some confidence that its recent efforts to stimulate the economy may be paying off. The pound rose for a second straight day against the dollar, extending its rally that began near the 1.41 level. The better-than-expected manufacturing data helped boost the pound's fortunes, as did a rally in U.S. stocks that improved risk appetite in New York trading. The euro-pound pair retested its lows from last week near the 0.9150 level in the wake of the UK manufacturing data. The pair then rose to retest its open before falling again in New York trading. With the Eurozone posting weaker unemployment and sales data, the euro is going into its ECB meeting tomorrow under pressure. We will monitor how the pair acts around today's support and tomorrow's trading. In the U.S., the ADP employment change showed the private sector shedding 742,000 jobs in March, a figure that was much worse than forecast and renews the concerns about the labor market prior to Friday's non-farm payroll report. The figure was the worst since the ADP began tracking this indicator in 2001. In better news from the U.S., pending home sales, a leading indicator for future home sales, rose 2.1% in February, larger than the small increase expected. More buyers are getting into the market to take advantage of stimulus incentives and much improved housing affordability conditions. And in a third release from the U.S., the ISM Manufacturing Index showed the pace of contraction in the sector slowed in March. The index registered at 36.3 compared to February's 35.8. Though shrinking for the 14th consecutive month, there were some encouraging signs from the data, including a big improvement in new orders and a hastening in the pace of inventory clearance. The euro-dollar pair traded mainly sideways today, bouncing off an upward sloping line of support that can be traced back to the beginning of March. The pair may see limited action prior to the ECB announcement scheduled for tomorrow morning, plus traders are likely to square their positions prior to Friday's U.S. non-farm payroll release. Stocks in the U.S. fell initially following the ADP employment change data, but the better-than-expected housing and manufacturing releases helped put stocks back into the green. The dollar-yen pair, just like the euro-dollar, saw limited volatility, though it moved below the 99 level. The US dollar-Canadian dollar pair rose above 1.27 overnight, but then created a double top in today's trading and fell back down to the 1.2575 level as a result of the rise in US stocks. That move broke a support level that had been established by connecting the two most recent prominent lows. Coming up tonight, Australia will post its trade balance data, while overnight the UK will post data on housing prices and its construction sector. Early tomorrow morning, the ECB will decide on interest rates, with expectations by economists of a 50 basis point cut to 1%. From the US, we get data on weekly jobless claims and factory orders. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.